Seasonal employment has helped to boost job creation in the fourth quarter of 2022. Data from Stats SA shows some 48,000 people were employed in the formal sector of the economy. The most jobs were created in the trade, business services, as well as the mining sectors. There were no changes in employment recorded for the transport and government services, while decreases were recorded in the construction and manufacturing sectors. Part-time employment accounts for 42,000 of the jobs that were created in the quarter, while only 6,000 were full-time employment. Over the year 2022, full-time employment decreased by 9,000, while part-time employment decreased by 85,000 over the past year. Well, for more on this, we are joined now by Sanisha Packirisamy. She's an economist at Momentum Investments. A very good afternoon, Sanisha. So the majority of the jobs created were part-time jobs. What does this tell us about the economy and the way that employers are going about securing labour?
Thanks so much, Nompu. Thank you for having me on the show. What we are seeing in terms of this temporary labour improvement coming through suggests that there is fundamental weakness in the South African economy. And I think that corporates are quite reluctant to hire on a more permanent basis, given the outlook for the SA economy and the likelihood that we are going to grind to a halt in economic terms this year.
What does that then mean socially? Because, you know, when you have a permanent job, you have a level of security, you can secure medical benefits with a great deal of ease and so on and so forth. What does that then do to the general disposition of workers if the trend is that of part-time work?
You know, we've come off a reasonably high base in terms of your consumption spending, and we've seen that consumption spending averaged around 2.5% last year. But as we've seen since the start of this year, there have been a number of mounting economic headwinds causing problems for the South African consumer base. And as a result, we think that consumer spending is going to slow quite significantly. Now, as you point out, the vulnerability of our workers in South Africa is reasonably low. Our own Momentum UNISA Consumer Vulnerability Index for the fourth quarter of last year suggested that consumers are feeling reasonably exposed. It's very difficult for them to save. It's quite difficult for them to budget in the constraints of high inflation, and it's also become increasingly difficult for them to pay down their debt levels.
So the year-on-year basic salaries or wages increased by 4.4% between December 2021 and December 2022. Inflation in 2022 averaged 6.9%. What does this then say about the working class's ability to cope with the higher cost of living?
What we are seeing from the consumers right now is a little bit of a bifurcated market. So I would say that your lower end consumer is typically facing a higher rate of inflation. When we saw the February numbers coming out from Statistics South Africa on headline inflation, we actually saw that the low end was facing inflation of 10.1% in year-on-year terms. So that's the bottom 30% of income earners in South Africa facing inflation north of 10% on the back of high food inflation, which of course makes a much bigger proportion of their basket. At your upper end, and I would say your top 30% of income earners in South Africa, typically facing inflation just slightly below 7%. And so you can already see that difference coming through. And as a result, your real wage erosion is much greater than for your lower end consumer that is facing this elevated rate of food inflation in particular that has been taking away from their real wage gains.
So total employment decreased by 94,000 when you compare December 2022 to December 2021. What's your projection for job creation prospects in 2023, given that we do have quite a lot of headwinds for the economy?
Unfortunately, it's not looking that great. We are looking for the economy to increase by around 0 to 0.5% this year. That is a very pedestrian growth outlook. And that implies then that businesses are going to be unable to really take on a massive amount of new employment in a very bleak global and local economic backdrop. If we look at the difference between the private sector and the public sector, since 2008, when the global financial crisis hit, the employment gains that we've seen to date predominantly came through from the public sector. There we saw employment numbers actually improving 37% relative to the first quarter of 2008. Whereas if we look at the private sector, we've only seen a 4% increase. Now, given the outlook for our fiscal dynamics, it's unlikely that government is going to be able to hire at such a pace, meaning that a lot of our employment load is going to fall again on the private sector. And with the reasonably bleak employment outlook this year, we're not really looking for that much in the way of employment growth this year.
All right, Sanisha. Sadly, we leave it on not a great note, but thank you very much for your insights as always. Sanisha Packirisamy, she's an economist at Momentum Investments.